Hi there, welcome to the Open here on BNN Bloomberg. Here are the big stories we are bringing you from our newsroom. Data from StatsCan indicates that retail sales across the country fell in October. The drop was led by food and beverage retailers, and it was bigger than economists had been expecting. However, in a flash reading, StatsCan estimates that retail sales saw a rebound in November with an increase of 1.2%. We're watching shares in Toronto-listed WildBrain today. That Canadian media and production company has agreed to sell its 41% stake in the Peanuts franchise to Sony Music Entertainment and Sony Pictures. The deal is worth $630 million cash. WildBrain says the money will fuel growth in its wholly owned franchises, including Strawberry Shortcake and Teletubbies, as well as expand its digital network and ad footprint. Shares in Nike are sliding in the pre-market after the athletic apparel seller warned that revenue will fall this quarter. Nike now expects sales to be in the low single digits when it comes to growth due to persistent weakness in Canada and at its Converse brand. Converse sales plunged 30% in the latest quarter, while Greater China revenue was down 17%. And Nike's direct-to-consumer business also disappointed. U.S. futures broadly pointing to a higher open this morning. Let's see how the TSX traded yesterday. Of course, our market has been weighed down lately by lower oil prices, but it's still not far off record highs. Speaking of oil, let's check it out. The prospect of a U.S. attack or stepped-up attacks on Venezuela raising some concerns about global supply. Meanwhile, Russian President Vladimir Putin offering no concessions on Ukraine. Let's check out gold, which has been trading near record highs this week, losing a little bit of altitude. And the Canadian dollar, which has had quite a rally as the US cuts rates, but Canada stands pat. And finally, let's have a look at Bitcoin, that biggest crypto, rallying a bit today, up about 3%. Let's focus now on the U.S. stock market and global stocks and the expectations and concerns surrounding AI. We're joined by, Andrew Sliman, Senior Portfolio Manager at Morgan Stanley Investment Management. Andrew, great to see you, and thanks for joining us.
Thank you, Andy. Nice to see you.
Start off with the current atmosphere. I mean, December, I know we've seen markets trading near record highs or even hitting record highs, but it's been choppy.
That's correct. The reason why the AI names rallied yesterday is the night before we got some very good earnings report from a chip company saying business was very strong. So it seems to me that when the earnings numbers come out and these companies keep telling us they can't keep up with demand, the stocks rally. But in between the earnings reports, when there's a lot less fundamental news, the market gets anxious about all these deals and these stocks sell off. So it's definitely a bipolar environment for these stocks right now.
That's interesting. Yeah, Micron assuring investors that demand is massive for memory chips to help run all this AI stuff. If you had to hazard a prediction for the rest of the year, for the balance of December, what do you think we might see?
Look, at the end of the day, a bubble is excessive valuation. And the reality, I know this is incredible to hear, but the S&P technology sector is trading at a lower forward PE right now than it did at the beginning of the year. And that's because there's so much anxiety about an AI bubble that it's really reined in valuation. Only, 2 to 3, I think 2 of the Mag 7 have outperformed, one's on the cusp. So that means 4 of them haven't outperformed the S&P this year, even though earnings have been very strong. So I suspect that there's more to go. In many ways, all the discussion of an AI bubble, it's constraining valuation, and that's ultimately a good thing. You don't want these stocks to run to extremes. Yeah, it'd be good for the market short term because there are big weightings in the index, but it would be bad long term. So I think all this concern is actually long term good news.
We know that companies have talked about massive investments. So actually, I read yesterday in Investors Business Daily, some of these big hyperscalers are saying, we're going to build a data center there and there and there, but they know some of them will be blocked by local opposition. So they're maybe announcing more plans than they actually intend to follow through on.
100%. And you heard also that a private credit company was pulling out of helping to build a data center because it's a publicly traded company, and the market is saying we're worried about how much money you're putting into the AI trade. So all that means, Andy, is that capacity will continue to have a hard time keeping up with demand, and that's going to ultimately give more power to those who have the capacity in terms of pricing.
Apparently, one problem with these data centers is noise. Now, I know some of them are remote and they're off in the desert or on some industrial estate, but you don't want to be near one, apparently, because it hums all day and all night with the fans and stuff like that.
Well, I live in the city, so I'm used to that. But yeah, no, that's news to me.
Yeah, the noise is, there's so much unnecessary noise I find in our cities as it is. What is your view on the U.S. banks? Would you be a buyer of the U.S. banks? Would you just buy them and hold them for the long term?
Well, I'm not sure, how long term is, but look, I think there's a lot more to go with these banks, because if you really pour into last quarter's earnings, the reason why they all had good numbers is they have more capital to deploy. So the capital being freed up is going to accelerate earnings. And these stocks still trade at very big discounts to the market. And well, that's because, everyone remembers, 08. But I think ultimately you have an opportunity here of, kind of the nirvana of investing, which is accelerating earnings growth plus PE expansion. That's how you make your big money in stocks. And I think that could be, that started this year, and I think it will continue next year. So yes, I think these stocks are buys.
Because the banks are sitting on vast amounts of undeployed capital.
Exactly.
Yeah, it is interesting. The Financial Times reporting that JP Morgan, well, with interest rates coming down, has taken money out of the Federal Reserve because it earns half nothing there and is putting the money into US bonds as well. In 2026, do you think we'll see any big surprise? Is there something investors you think are underestimating right now?
Well, if I knew that, that would be great. But I think what's important to always consider, Andy, is when is the market vulnerable? Okay, when is the market vulnerable? And we started last year very strong. A lot of kind of price targets at the beginning of the year were very lofty, 7,000, which was a long way from 5,800, which is where we started 2020 this year, 2025. And then we get so the market takes off, and then we get a surprise tariffs, and it washed out a lot of the bullish sentiment, and it really reset the market for another run. So I am equally concerned as we start 2026. Seems like Wall Street is pretty optimistic on 2026. We do need a washout. I don't know what it will be. I do know that what kills bull markets is the Fed, and it's not valuations, it's the Fed. And so if in fact we got some higher inflation prints, which we certainly didn't yesterday, I think that would cause investors to say, well, wait a minute, maybe the Fed's not on this cutting path as quickly as we think. And that would cause a pause in the market. And I also know that historically, when you have big spikes of inflation, as we did in 2021, 2022, you tend to have a resurgence a few years later. I think that's the biggest risk to the market. We'll have to see.
Yeah, wasn't that the famous thing? William McChesney Martin said the task of the Fed is to take away the punch bowl just as the party gets going. Always
that's exactly right.
A misery guts. Thanks very much, Andrew.
All the best, Andy. Thank you.
Andrew Slimman, Senior Portfolio Manager at Morgan Stanley Investment Management. Up next, we're going to hear how the ski industry is facing shortened, more variable seasons amid global warming. But this year, the season is off to an early start in parts of Canada. An Alberta clipper roared through Saskatchewan yesterday, dumping more than 10 centimeters of snow onto Saskatoon. It's great news for those in the ski business. They are now busy mixing that snow into what they've already made. CTV's Alison Bamford has more.
This is what Tom Wilms calls his hobby job, essentially playing in the snow, pushing, packing, and piling.
And that's the final touch.
Saskatoon's Optimist Hill opened this week, a little behind last year.
This year's been a yo-yo. It's warm one day, cold the next day, and it's hard to really make good, efficient snow.
Virtually all the snow on the hill was man-made. The rest brought in from parking lots around the city.
The more snow we get falling out of the sky, the less we have to make and pay for.
Like the weather, across the country, ski season can be a mixed bag. In Banff, almost all of Sunshine Village's snow comes from the sky. A fresh dump this fall allowed for their earliest opening on record, November 2nd.
The sooner we can get skiers and snowboarders onto terrain, it packs it down, and it just is really good for the base.
Further east, a few December snowstorms have hills in Wentworth, Nova Scotia, reaping the rewards.
Right now it looks like mid-February here in Wentworth, so it's by far the best start that we've had in a long time.
Research shows the ski industry is facing shortened and more variable seasons due to climate change, but resorts believe these early starts typically translate to strong seasons.
Kids come out with their ski gear, their new ski gear at Christmas, and the vibe just keeps going into the season, right?
Back in Saskatoon, even a slow start to the snow hasn't hampered excitement.
Everybody's so happy to be outside.
Yesterday's blizzard closed Optimist Hill. Today, it's the cold temperatures that skiers will have to contend with.
Okay, CTV's Alison Bamford. Up next, we're going to tell you about a growing number of Canadians being targeted by AI-generated videos to invest in cryptocurrency scams. Canadians are being aggressively targeted by AI-generated videos to invest in cryptocurrency scams. A W5 investigation found that some investors lost their entire life savings. CTV's Pat Foran reports.
How did you feel when they said you're going to have to sell your house to get your money back?
Heartbroken. I was broken into pieces.
A woman we'll call Denise of Markham, Ontario, asked us not to reveal her identity as she is devastated and embarrassed to have lost her life savings in a cryptocurrency scam. In July of 2023, she was on Facebook when she saw a story featuring billionaire Elon Musk saying she could get rich fast.
Millions of users were able to close all their debts in the first week on the platform.
It said that you just have to invest $250 and you get on his platform and you're going to make money daily.
Denise sent $250 to what she thought was Musk's platform. 2 days later, she received what she was told was $30 US in profit. Convinced it wasn't a scam, she was told if she invested more, she would make more.
And they keep calling me and tell me that people are making so much money and that if you put more, and I said, okay.
Denise decided to go all in and took out a second mortgage on her home.
I applied for almost $1 million on the equity in my home. I took it out and I started sending it to them, right? Like $350,000, $350,000.
After investing $1.2 million, she thought it had grown to over $3 million, but when she tried to take money out, she was told she needed to pay taxes and fees. She borrowed another $500,000 from family and friends and maxed out credit cards. In the end, she was scammed out of $1.7 million.
I don't have no retirement saving. Everything is gone.
There are fake AI-generated cryptocurrency videos featuring former Prime Minister Justin Trudeau.
We have developed an investment platform.
And current Prime Minister Mark Carney.
Make your initial deposit.
You could invest in it for as little as $250.
Donald Hanrahan of Charlottetown PEI was online when he saw a story about investing in cryptocurrencies promoted by Dragon's Den. The show currently has a warning online saying it was targeted by a number of fake advertisements on Facebook. Hanrahan started investing with small amounts, but eventually put in everything he had.
I was getting at one point about 10,000 Canadian per day, okay? And it eventually, it added up to $600,000.
When Hanrahan tried to remove his funds, he couldn't and realized he'd been scammed out of the entire amount.
I was, scammed by professional people. That doesn't give you much consolation when you've lost all that money.
According to the Canadian Anti-Fraud Centre, Canadians lost $1.2 billion to investment scams over the past 3 years. That's only what's been reported, so it's expected it's much higher. Most involve cryptocurrencies and fake AI-generated videos.
It's really hard to know what's real now because this technology is so sophisticated now that it's really nearly impossible to know what is real and what is fake in some cases.
Is it going to get better? Is it going to get worse?
Oh, it's going to get worse.
Tomorrow, we speak with a crypto investigator who says many of the scams targeting Canadians are coming from Southeast Asia, and there is a shocking reason why the scammers may have no choice but to break the law. Pat Foran, CTV News, Toronto.
Yeah, the blessings of cryptocurrency adding so much to society. CTV's Pat Foran reporting. Amazing job there. Canadian media company Wildbrain is selling its stake in Peanuts to Sony Music Entertainment. We're joined by our own Lindsay Biscaya. Lindsay.
Yeah, a 41% stake, Andy, being sold to Sony for $630 million Canadian. So not a small deal here. And this means that Sony will be taking an 80% stake in Peanuts, and then the other 20% is owned by the family of the creator of Peanuts. And for people who don't know, Peanuts, of course, very famous for its cartoon strip of Charlie Brown, Snoopy, first introduced back in 1950, the whole Charlie Brown gang. So that goes back a long time.
1950?
1950, yeah. Wow. It's been around for quite some time.
I remember it as a kid in the 70s reading it. I didn't know it went back that long.
Yeah, it did. And it's funny when you watch some of the stuff today, like I was just watching the Christmas episode recently, and you can tell it's been around for a while, but it still holds up, right? It's a classic. A lot of people love it. Now, when it comes to the money, the $630 million that Wildbrain will get because of this deal, they say it'll fuel growth in its franchise, eliminate 100% of its debt. So fueling growth, including Strawberry and Teletubbies. These are two of the big cartoons that Wildbrain produces, fueling that growth and also helping to expand its digital footprint. We're going to be watching the Wildbrain stock today. It should go up quite a bit when the bell opens because of this deal today. And that deal, of course, still subject to regulatory approval.
I just watched 28 Years Later, which is a follow-up on 28 Days Later, the zombie movie set in Britain. And the kids, almost 3 decades after the zombie outbreak, they're watching a blurry video of the Teletubbies.
I know, it's been around for a while as well.
Yeah.
I remember watching that when I was a kid. It's weird, but it also has held up throughout the years.
Hypnotic.
Yeah.
Is anything going to change with characters we know so well?
At this point, they say no. The president and CEO of WildBrain, Josh Scherba, is saying he's confident Charlie Brown, Snoopy, and the gang are in good hands with Sony Entertainment. But it's important to note, too, under this agreement, WildBrain still remains a partner to Peanut, so they'll have exclusive licensing for consumer products in certain countries. They'll be a distributor of WildBrain-produced Peanuts content, and they are going to operate an exclusive production studio for new Peanuts content. So they're not totally out of the woods yet, or not totally uninvolved at this point, but most of that transferring over to Sony, and there's confidence that Charlie Brown and Snoopy will be just fine.
I'm just trying to remember, who was the mean girl in Peanuts? Was she Violet?
With the dark hair?
Yeah, she would always yank the football away.
I don't remember.
Was it Lucy or Lucy?
Oh.
Yeah, Lucy Van Pelt. I'm sorry. Yeah, Lucy. She would yank the football away before Charlie Brown got to kick it.
Yeah, she's a good character.
She was cranky every day. Yeah. Anyway, Lindsay, thanks very much. Lindsay Biscaya. Okay, let's have a look at some stocks and markets before we go to break for the opening bells. BlackBerry is in focus right now. RBC has a hold on the stock. You can see it slipping in the pre-market. RBC cautioning that, sure, there was a beat in Q3 and they improved the guidance, but the software, the QNX software suite, is likely tracking to a lower growth trajectory. The upside apparently came from a one-time revenue at the secure communications business. So RBC cautious there. Let's have a quick look at U.S. futures as we, it looks like we are moving higher. Usually December, a great month for investors. People start thinking with new hope about the new year that's on the way. Let's have a very quick look at oil, because oil has had a miserable month, hitting over the past few days its lowest in 4.5 years. Oil is holding in today. Vladimir Putin of Russia holding out and saying, I'd like a deal in Ukraine, but on my terms. He won't make any concessions from his demands, territorial demands. And so if that's the case, the sanctions stay on Russia, and that oil, in theory, is kept off the market. But of course, as is usually the way with oil, it just gets leaked out one way or another, whether it's surreptitious tankers off the coast of Greece transferring crude, or oil always finds a way. And let's have a quick look at gold, because gold not far off record highs. And there you have it, losing a little bit of altitude today. The spot price of gold, I'll bring you that after the market opens. But 4,327, the spot price. Those opening bells are coming up next. Opening bells at the NASDAQ, it's Occhio Pharma doing the honors at the New York Stock Exchange. It's Shark Beauty Women's Champions Classic. It's time for the first 50. Let's check in on the big North American benchmarks here as we get going on this Friday. And you can see stocks generally moving higher. On a week, of course, that the Fed... there was talk of more interest rate cuts from the Fed. The Fed are making no promises, but there is optimism that it may cut again. And we got numbers pointing to a lower inflation rate this week. It's south of the border, although there's skepticism because of delays, etc., due to the government shutdown. One stock on our radar here is BlackBerry. The company beating the headline number indicates, but RBC cautious, sticking with the whole, saying that it was due to a one-time revenue boost in their secure communications business, and RBC saying that QNX, their important software product, is set for lower growth. We have a transaction in mining. Lundin Mining is selling its Eagle mine in Michigan to Talon Metals. Wow, investors like the look of this deal. Talon Metals in Toronto up about 35%. Lundin Mining gets a whole bunch of shares in Talon, more than 18%, moves its total stake north of 19%. The deal being valued, or the shares being issued, being valued at about $84 million US. And let's have a look at Carnival, the cruise giant. That stock gaining up about 2%. Profit in the latest quarter well ahead of expectations, 34 cents. The street was looking for only about 25 cents. Sales were marginally below estimates. And FedEx reported after the bell yesterday. Second quarter revenue came in, wow, the size of this company came in at $23.5 billion US, and that beat estimates. And adjusted earnings of $4.82 a share topped expectations. There was strength in the package business, bigger US volume overall, and ongoing cost savings. However, the freight segment declined, and there were $152 million in one-time spin-off expenses. The company, though, increasing its fiscal 2026 revenue forecast and lifting the low end of its profit guidance. Let's get some more movers south of the border. We're joined by Jeff Morgan, Deputy Team Leader for the Bloomberg News Equities team. Great to see you, Jeff. What's going on at Oracle? That stock's been battered over the past few weeks.
You're absolutely right. It's been battered over the past few weeks and is getting a nice little bounce so far today. Some good news for this stock for a change. They are going to lead a group that will buy TikTok, and the stock is rising as a result of this. A handful of analysts on the street see this as a positive for Oracle. Not only does it give them a little bit more revenue, and it also kind of backends their cloud business. It also gives them an ownership, TD Cowen says, in a highly strategic growth asset, which is TikTok. And so, yeah, big news for them this morning, getting a big lift. But, you know, as you mentioned, this stock is still facing a few headwinds, a few concerns about how it's going to fund its big data center and AI related build out. So it has been battered over the last few weeks, getting finally a little bit of a bump today.
And investors not loving the latest numbers from Nike?
No, yikes, big move lower this morning. This is the worst performing stock in the S&P 500 so far. The numbers from Nike, primarily this is a plunge in their sales in China. And this is kind of viewed as something that would potentially delay a turnaround story for Nike. So big move lower this morning, 10% down. And this is going to, if it stays at this level, it could erase about $10 billion in market capitalization for Nike. The analysts, Wall Street really not liking these results so far. Citi, Jefferies, Piper Sandler, all cutting their price targets on the stock this morning, which is adding to a little bit more pressure. Nike, kind of a day to forget for them.
Okay, wow. Yeah, that's interesting. Nike just, they can't seem to get the mojo back. Thank you very much indeed, Jeff. Up next,
my pleasure. Thank you.
Jeff Morgan of Bloomberg. Up next, we're going to put the spotlight on Canada-US trade as the Prime Minister plays down chances of agreements in the near term. Our ability to understand weather affecting Canada is about to take a big hit. It's thanks to the shutdown of a research facility across the border. CTV's BC Bureau Chief Andrew Johnson explains why climate scientists are sounding the alarm.
When it comes to studying climate change or predicting fires and floods, Canadian scientists say research coming out of this giant lab in Colorado is the best in the world.
It is number one, without doubt. It is the most important global resource for understanding climate in the atmosphere.
That's why Canadian experts are calling a new move from the Trump administration devastating and destructive. A top Trump official says the National Center for Atmospheric Research, or NCAR, will be dismantled, accusing it of being one of the country's largest sources of climate alarmism.
The loss of NCAR would be quite devastating for not only the scientific community, but really the everyday person.
We're going to be less able to deal with some of the changes we see in climate going down the road into the future.
More than 800 people work at NCAR, and experts believe the closure could also create an opportunity for Canada when U.S. climate scientists look for work elsewhere.
Maybe Canada will welcome some of them, and many of them will end up in Europe.
If there's anything, to be said about unfortunately the lack of climate leadership from the U.S., it's that perhaps it's time for also Canada to step up in this regard.
She points to the newly announced $1.7 billion in federal funding to attract global talent as a step in the right direction, turning America's loss into Canada's gain. Andrew Johnson, CTV News, Vancouver.
Okay, we are going to take a break now. I want to remind you about Market Call yesterday. We were joined by Brian Madden, First Avenue Investment Counsel. And Brian, one of our regulars, always dapper, always well informed. Like these stocks, Trican Wealth Service, TCW, McKesson, the huge drug distributor in the United States, and Intact Financial, the huge insurance company. And on the show today, we're going to hear from another of our regulars. I shudder to think how long David's been coming on. Makes me feel old. David Burrows will be joining us, President and Chief Investment Strategist at Barometer Capital Management. And he'll be taking your questions on North American large caps. Up next, we do put the spotlight on Canada-US trade. Prime Minister doesn't sound hopeful on any kind of agreement soon. The Prime Minister says he's ready to sit down with US President Donald Trump to hash out plans to ease tariffs in certain sectors. Let's get more from CTV's Jeremy Sharon. Jeremy.
Hey, Andy. Yeah, the Prime Minister has indicated that basically the Canadian side is ready to negotiate at any time. If the White House decides that they are ready, if President Trump decides they are ready, that the Canadian side is ready to negotiate on tariffs, on sectoral tariffs, and would love to get a deal done on sectoral tariffs ahead of CUSMA renegotiations next year. But there are also indications that the likelihood of a deal prior to the beginning of CUSMA renegotiations at this point is unlikely, and that any negotiating between Canada and the U.S. on trade or tariffs will happen at the CUSMA negotiation table. And so what we know now is that the minister in charge of Canada-U.S. relations, Dominic LeBlanc, will be meeting with his U.S. counterparts in mid-January to formally launch CUSMA talks and renegotiations. And so that is when we will start to hear about, Canada's priorities and what they would like to focus on. We're told, and through the readout that the Prime Minister's office provided from yesterday's meeting with the premiers, that was a lot of the focus in the meeting with the premiers yesterday was the ensuing CUSMA renegotiation and where Canada stands on it and how Canada plans to prioritize Canadian businesses, the Canadian economy in those renegotiations. We've now heard, Andy, from Washington what their priorities are. The dairy industry, we're looking at some images right now of the dairy industry, is going to be kind of priority number one here. I suspect that as these renegotiations go on, this is going to be a major talking point. Donald Trump has expressed his frustration or his dislike for supply management in the Canadian dairy industry. He wants U.S. dairy farmers to have more access to the Canadian market. They only get access to about 4% right now of the Canadian market as a result of supply management and the way the industry operates. Washington has been clear they don't like that. They want their farmers to have more access to the industry, and that is going to be likely a big talking point in these negotiations. We also know from Washington they want U.S. alcohol back on the shelves, Andy. That is going to be a big talking point. And they want changes to the Online Streaming Act and the Online News Act, which basically allows or force streaming services and online news services to follow the same guidelines and rules under the Broadcast Corporations Act as big news agencies. But that stops a lot of news content from making its way onto major social media platforms like Meta, like Instagram, and the U.S. doesn't like that. And so they want to see some changes there.
Meanwhile, the Prime Minister and Ontario's Premier signed an agreement aimed at streamlining mining development in Northern Ontario. Does this set any kind of precedent for other major projects in the works?
Yeah, I think it does. I think it's, it's in line with what the Prime Minister has been pushing for, which is a streamlined approach through, firstly, the Major Projects Office, but also here, regulatory rules and regulations. What they announced yesterday is basically that, Ontario and the federal government are going to fall in line when it comes to certain regulations that have sometimes slowed down the process, and ensure that, one one approval is enough, and that things aren't being duplicated or repeated in an effort to get projects underway faster, specifically the building of roads and stuff for the Ring of Fire in Ontario is the idea for yesterday's announcement. But I think absolutely, Andy, this sets a bit of a precedent and shows the Prime Minister is open to working with provinces on a bilateral basis to ensure that beyond what is happening at the biggest level with the Major Projects Office and some of these major projects that are being looked at like that the Prime Minister is willing to work with provinces on certain, regulatory processes to ensure that they're on the same page and that they can do everything they can to make sure projects are being rolled out and are not failing to launch as a result of delays partially due to regulations and processes and approvals.
Jeremy, thank you very much indeed. Jeremy,
anytime, Andy.
Jeremy Sherrill, our colleague at CTV News. Up next, we'll check out some early market movers on Bay and Wall Street. We'll hear about some hidden winners in the AI boom. A lot of the talk about AI is in terms of software and chips, but a key driver behind the boom is power. BNN Bloomberg contributor John Ehrlichman has a story on this on our website. John hosts the investing channel Ticker Take on YouTube. John, what's the thesis here? What's the story?
Well, I think, Andy, after a big year for AI, we've talked a lot about this. If people are looking ahead to the new year, the first question is, do you continue to believe in all the AI hype? And then if you believe in that, what lens are you looking at it through? Are you looking at it through these hyperscalers, the big technology companies that are spending all the money? Are you looking at it, to your point, through the lens of the companies with the technology that powers all of this, the chip companies like NVIDIA? Or do you broaden it out to take more of a so-called picks and shovels approach to the boom? And yes, we did explore that in our latest Ticker Take video on YouTube, and we have a full write-up on the BNN website with some different stock ideas from Matt Sally of Tortoise Capital. Now, Matt is more of an energy utility investor, at least over the long term. So his view is this is a shining moment for electricity. He calls electricity the new oil. He says at the end of the day, looking to the companies, and the big technology companies are, let's face it, Andy, they are all building data centers, and it's nice to have the chip technology for that, but they're realizing they need a lot of power. So how is the grid being reshaped? How is it evolving? Which companies could capitalize on that? Matt's pretty convinced that's going to be a longer-term theme that will benefit investors, but he's looking beyond just tech. Like, they like stocks like Dell Technologies, which has great storage and server and data center service capability, but they're looking well beyond that.
John, give us some examples of stocks we're talking about here.
Yeah, so I think sort of in Matt's book of business, if you will, I thought I'd look a little bit more at some of the power slash regulated utility names, because we've already talked so much this year about the big technology companies. So as an example, like their firm has owned Energy Transfer, ET, for I think like 2 decades, and that is a company that has upwards of 125,000 miles of pipeline. They have extensive pipeline networking in Texas, where we're already seeing a big data center build out. So there's a closeness and an ability to sort of capitalize there. They like companies like Evergy, which is, traditionally a sleepy Midwest utility. But again, if the opportunity for electricity is big, they're bullish on Evergy, EVRG. And then getting back to the pipeline story, companies like Williams, which has also a very impressive footprint, more so on the East Coast, but has also been leaning into new power delivery. So, and the whole industry is right now, because, at the end of the day, there's a lot of sourcing that is required. And with all these companies, I think the common theme, at least from Matt's vantage point, is you're not looking at the same valuations as you might see with big tech. So he continues to see an opportunity broadly in that area. I think, the fact that we're talking about some U.S. names here, Andy, is a reminder that there's plenty of Canadian companies in the power arena that have a great opportunity here, and hopefully for Canada, it is ultimately seen as a great opportunity for our economy.
Let's maybe put up a 5-year chart for CPX, John, on that note. Alberta-based power generator, and they are working to build data centers. They say laxer rules on pollution from power stations in Alberta will help them. It is interesting, though, apparently in quite a few communities in the United States, residents are annoyed about higher power bills, electricity bills, because of these things suck up power.
Such an important point, Andy. And I think that, the more attention that comes into this area, the better it's going to be, because I think at the end of the day, the navigating of those issues is paramount. And just in the same way that we've seen sort of the challenges in building pipelines in this country, if there is more pushback from local communities towards building more data centers, all of a sudden that starts to complicate this story of not just how much demand there is for these services, but how quickly they can build it out. That's the kind of thing that might show up in earnings reports. It's definitely a theme to watch.
Yeah, I mean, we've heard obviously Canada has some advantage because these centres need so much cooling and we have a colder climate, lower temperatures. One thing that is interesting, though, south of the border, apparently both Republican politicians and Democratic politicians are feeling heat from voters, and they are joining the criticism of the data centre. So it's almost a bipartisan issue in America, and that's very rare.
Well, pocketbook issues become very real for voters, and you're right about that. And so you have to wonder where, after a presidential election cycle where you saw a lot of the technology money funneled towards the Republicans and Donald Trump, what happens as we move into the midterm cycle and the next presidential cycle? That would most definitely be an interesting thing to watch. I don't know, based on the polling, how high your power bill ranks, maybe because people don't sort of think about it immediately as much as they might think of other issues. But you're right, pocketbook issues are big.
John, thank you very much indeed.
Thanks, Andy.
John Ehrlichman, BNN Bloomberg contributor, and of course he's the guy behind the Ticker Take feed on YouTube. Let's check out some movers in Toronto. We'll start off with the broad index here. And there is the TSX moving higher in morning trading. BlackBerry taking a hit here. There are concerns about, among some analysts anyway, about the growth for its QNX software. That's the analysis from RBC, which has a hold rating on the stock. Let's have a look here at G2 Goldfields because they have announced the preliminary economic assessment for their high-grade Oko gold project in Guyana. South America. The symbol for G2 Goldfields, I think we have the stock at GTWO. I'm not sure if we have that one, but we can go back to it. A couple of other stocks doing well here. Here's another one in the gold space. Let's have a quick look at Wheaton Precious Metals. This stock, WPM, not quite hitting a record high, but pretty close to it. So where is it? 161.75, essentially at a record high today. It's a darling, obviously, and they have so many streams and royalties out there on mines that are ramping up that their production, virtual production, if you like, is going to be rising over the next year or two. Let's have a look at Royal Bank of Canada. That one hitting a record high today as well. You know that the Canadian stock market's likely to be doing well when Royal Bank is hitting record highs. Let's have another look. Maybe we could have a quick look at CNQ, a 5-year chart for Canadian natural resources, because it's really pretty impressive how well a lot of I know it's down from its highs, how well, though, a lot of these Canadian oil sands stocks have held up, given the weakness in oil prices. And of course, that's partly because these oil sands installations are just cash machines. They've done a lot of the spending up front. Natural gas is a variable cost. They use vast amounts of natural gas to actually transform the sludge into something usable. They need vast amounts of energy. So if natural gas prices go up, it will tend to cut their profit margins. But certainly they've delivered for investors, those gigantic oil sands stocks. A couple of other gold stocks and gold-related stocks doing well today. Let's have a quick look at Barrick Mining, ABX, trading in record territory, as well as that company trims its portfolio. And the IMF sees Mali's economic output are overall improving because the deal with Barrick will add to activity there. We're going to be right back with the Open. We're talking to John Zechner. Welcome to the second hour of the Open. Let's get to the big stories we're bringing you from our newsroom. Data from StatsCan points to a decline in retail sales across the country in October. The drop was led by food and beverage retailers, and the numbers came in weaker than economists had expected. However, in a flash reading, StatsCan estimates that retail sales saw a rebound in November with an increase of 1.2%. Another look at shares in BlackBerry trading down today. Revenue and profit in the latest quarter came in above Bay Street expectations, but investors may be focusing on an actual decline in sales. They were down nearly 1.3%. However, BlackBerry did raise its full-year profit and revenue forecasts. Shares in WildBrain are surging. That Canadian media and production company has agreed to sell its 41% stake in the Peanuts franchise to Sony Music Entertainment and Sony Pictures. This deal is worth $630 million in cash. WildBrain says the money will fuel growth in its wholly owned franchises, including Strawberry Shortcake and Teletubbies, as well as expand its digital network and ad footprint. TSX up about 1% in a morning trading. A whole bunch of gold stocks strong. I see Barrick Mining hitting a record high. First Quantum hitting its highest in at least a year. New Gold climbing yet again. Let's have a look at the U.S. markets now because they're strong as well. You can see the NASDAQ rallying. Jeff Morgan pointed out that Oracle, which has been battered, is attracting some investors. Nvidia up almost $6. Tesla is ahead. Apple slipping slightly, but we are seeing Oracle rallying more than $14. Investors like that deal in which it's involved in a group of buyers buying TikTok. Yeah, it's interesting. Oracle, according to TD, will get ownership in a highly strategic growth asset, and it'll drive revenue for the company's cloud infrastructure business. It does seem weird, though, Oracle buying into social media. In any case, let's have a quick look at oil, because it is showing signs of life right now, but remember, it hit its lowest in almost half a decade this week. And let's check out gold. As promised, I'll give you that spot gold price. Gold, the February gold futures marginally higher. And we have spot gold, which in theory you would get if you walked into a dealer with a bar of gold. Well, you're going to always pay a markup or a discount. You'll get spot gold 4334 in the wholesale market, down from its record of 4356 on October 20th. And a quick look at the Canadian dollar, and it's gaining again against the US currency. Revenue decline at BlackBerry apparently not delighting investors. Let's get more from John Zechner, chairman and founder of J. Zechner Associates. John, thanks very much indeed. You and I have been tracking BlackBerry for years now. What's your view on the stock? I mean, they've carved out quite a franchise with this QNX software. It's used in autos and elsewhere.
No, you're right, Andy. I mean, QNX, probably actually the last major acquisition that Jim Balsillie did back in the day. And that's really almost become the heart of the company right now. Having said that, that was a bit of a disappointment. I think the year-over-year growth was around 10%. And I think the market expectations had been about 15%. But they're really only down to the two core businesses right now, that and secure communications, which is effectively the old Silence and what they have left of their cybersecurity operations, where they really didn't make much of an imprint there. It's been a disappointment, and I think the year-over-year revenue was down about 10%. So you look at it on that basis, the company's hardly growing. It's got the two divisions left. One is actually shrinking, the other is sort of the core of it and growing and doing fine, but that doesn't justify the valuation, trading about 25 times EBIT, which is, you pay that for an extremely high growth company in a strong field and market dominance, and I don't think they're showing it there. I mean, you wind the clock back, like I said, Andy, there's been a lot of ups and downs over the years. I think John Chen, I never got, he properly, I think, was appreciated what he actually did when he came in and took over the company in 2013, and effectively their core business was headed to zero. How do you do that when your core business is headed to zero? You had to replace it in a hurry, and I think he did a good job sort of putting it in a position just to keep it alive this long, but it's nothing you're paying for the growth for. There's nothing, particularly proprietary about any of their software. And certainly they did not make much of a dent in cybersecurity, despite the fact that, the old BlackBerry Messenger was one of the best sort of security platforms back in its day, but they never really sort of parlayed that into better growth.
Let's talk about Nike. They just cannot fix their Chinese business, it seems.
Chinese business was difficult. The sales channels are going into sort of direct sales as opposed to the broad-based sales through channels. The Converse brand is not doing that well. The numbers actually beat the expectations, but just the guidance going forward is sloppy. And like I say, China sales are a big part of that. And I mean, it's more the same we're seeing, Andy. Cost-conscious consumers out there are paying less for the branded names. And they're sort of driven to brands, but still, they're not going to pay the big premiums for it. You see margins under pressure as well. I mean, you go back to what Lululemon and the restructuring they're doing, and how miserable that stock has been for the sort of past year and a half, and that's just more of the same. And I think Nike is going through that as well. They just they've got the brand, they've got the name, but they're not getting the premium, and they're not getting the proper distribution. And China sales had been a big part of it in the past, and that's clearly is diminishing.
Apparently, the China. Excuse me. You touched on this, John. Apparently, China is different. It's a so-called monobrand economy for this kind of product, and companies typically sell through their own stores. Now, I know Nike does that, but they're having trouble selling through other retailers there.
Yeah, they are. And I mean, the guys who have probably beaten that metric better than anybody in China is Apple, because it's the same thing. Is you've got a lot of competition from domestic brands that are effectively no-name brands. You're trying to sell a premium product at a premium price, and yet their sales have held up pretty well in there. So kudos to them. They certainly beaten that that metric a little bit.
Oracle involved in taking over TikTok. It seems weird to me that a company, this was a database software company and enterprise software company, now involved in social media.
They got the feelers out everywhere, Andy. I mean, I'm sort of just writing some year-end comments, and I've seen a line I've seen lately that I like. If NVIDIA is the AI coal mine, is Oracle the canary in that coal mine? And it really has been, because there's a few things. I mean, it popped in September massively. It got north of $300 on the big, because they were trying to position themselves as the AI cloud company going forward. They had the big order flow. They had the massive increase of 300 billion or over the next six years effectively, but people then started to question a little bit of how are you getting the finance on it. Their debt spreads are going higher, and the definition is RPOs, remaining performance obligations. It's not even really revenue. It's something that could turn into revenue, and that's a lot of what they were reporting, and that's why all the skepticism is rising up about this. Okay, how real is this? So that is a bit of a worry, and then sort of the convoluted financing and debt financing you're seeing in the sector is worrying a lot of people, and Oracle really seems to be at the front end of this. Yeah, they dominate database software, which they have for years. So it sort of makes sense. If data is the most important part of sort of the AI expansion, if you can make yourself an AI cloud player, you're going to do it off an Oracle database, an Oracle-based data center, and you can sort of see why that makes sense. But the stock got so far ahead of itself. They're doing all this finance via debt, and people are just getting uncomfortable. I mean, you can stay in technology, and there's a lot of safer places to go where you're not paying big multiples. Some stocks have been under pressure. I look at, the software companies, the Adobes and Salesforces of the world, even, some of the big hyperscalers, Amazon, Alphabet, Meta. I don't see the big risk in there. I think they'll integrate AI better than most of the rest. They got the platforms and the public clouds where they can do it. The more speculative players are the ones that I think can get into trouble. Those are the ones, you look at a CoreWeave. And even what Oracle did, how quickly it's come off. I think it's 40% down from its September peak. So, that's the danger in there. People just get too excited about a concept. But there's that time when you've actually got to deliver on the numbers and the revenue and everything else. And if that doesn't happen, boy, oh boy, there's a lot of air underneath those stocks.
Yeah, it's interesting. I should have said that Oracle is apparently part of an investor group that's going to control a joint venture that will run TikTok's U.S. business. Yeah, John,
which is that's a great platform. I mean, it sort of makes sense, and they wanted to get it out of the Chinese hands, and clearly, it's there's a lot of users of it right now, so you do want to sort of, it's an advantage to whoever can get a hold of it. So Oracle has been sort of leading that charge for a while, so it is a positive that they've got it, but they've got a lot of oars in the water right now, that's for sure, and they're not all yielding returns.
Thank you very much indeed, John. John Zechner, chairman and founder of J. Zechner Associates. Coming up, we're going to check out a few of today's notable calls, including one on energy fuels. Our first notable call is on energy fuels, the uranium player. Texas Capital has started coverage of the name with a buy rating and a $20 US price target. I think we're showing the Canadian listing there because that would translate to an upside of about 40%. Energy Fuels, a critical mineral company. It specializes in uranium, rare earth elements, and vanadium. And the firm says the company's White Mesa Mill in Utah has a licensed production capacity of 8 million pounds of uranium a year and is the only conventional uranium mill operating in the U.S. Our second notable call is on West Fraser Timber. RBC's cutting the price target. The analyst over there, Paul Quinn, bringing that price target down to $85 US from $91 and sticking with an outperform rating on the shares as part of a broader research note previewing the forestry industry in 2026. We know this was a challenging year for many companies in the industry. Demand conditions remaining tepid, and that could well last into early 2026, according to RBC. Okay, our third notable call is on Coca-Cola, and it's getting a price target raised to $85 US from $80 at Bank of America. The analyst over there, Peter Galbo, raising the price target and sticking with the buy rating, entering 2026. The analyst says the largest unresolved question for staples remains consumption growth, and valuations are all over the map. But the analyst warns, quote, there feels little to get them off the sidelines in 2026 until fundamentals signal a greater turning of the tide. After this, we're going to tell you about that brutal condo recession in the country's biggest housing market and hear how it's causing a developer shakeout. Let's just have another look at the Canadian dollar because we got sort of mixed news on Canadian retail sales. You can see our currency holding in. Apparently, though, according to early estimates from StatsCan, in November, Canadian retail sales were up by 1.2%. However, that followed a decline, a slight dip in October. And it's perhaps no wonder that retail sales are choppy in this country with people feeling poor. Of course, notoriously, people feel inflation is terrible, but they don't reckon that their own incomes have risen. Okay, well, let's get to a market that's looking at deflation. Toronto is awash in unsold condos, and they just keep coming on the market. Apparently, more than 8,200 units are sitting there unsold. Prices are already down 20% from the peak, and another 10,000 units are on the way to the market. They're too far into construction to be called off. We're joined by Bloomberg Canadian wealth reporter Ari Alstetter. Ari, great to see you. Quite the meltdown in the condo market, and we keep hearing these small investors who bought them to rent out are being burned.
Yes, that's right. I mean, it was really these small mom and pop investors who powered Toronto's condo market for the last 10, 15, by some measures, even 20 years. The idea was you buy a unit pre-construction, putting down a down payment. And then when it gets built, 4 or 5 years later, you have a unit that you can rent out or even in some cases flip, because the hope was that by that point, the market price had risen much faster than the price you had originally agreed to pay. So these kind of investors really powered a lot of the condo construction in the city. And they kept on doing it right up until the peak of the market in sort of early 2022. But that's, of course, when interest rates started rising. A few years later, even after interest rates settled, population growth started to calm down after the federal government brought down immigration targets. And that combination of higher interest rates, fewer people coming to the city, suddenly made these good investments not such good investments anymore. But the problem was they'd already committed to buy them, 3-4 years in the past, and there's no stopping it once a condo building is starting to be built.
Yeah, it takes 5 years in some cases. And some developers are already going bankrupt?
That's right. There's been a really big wave of receiverships in Toronto among construction companies and companies engaged in real estate activities. The activity, the data I got from the Office of the Superintendent of Bankruptcies shows that really this started to spike in 2023. It went to a record. A new record in 2024, the amount of receiverships in this sector that were filed. And there's no annual data yet available for 2025, but there's a chance there's a new record hit in 2025 once we get all the numbers. It's certainly on pace for another very elevated year in terms of real estate receiverships in Toronto, whether it's a record or not in 2025.
So you looked in your story at this building, the One at Yonge and Bloor. Apparently it's now been renamed One Bloor West, but that went bankrupt and Tridel took it over. And one thing that's interesting, they tore up contracts under which people were going to buy condos, just return their money.
That's right. There were a number of these pre-construction deals made on this building, the One. And if you're not from Toronto, the One has sort of become, for many residents, a symbol of Toronto's condo boom and bust cycle, because originally there was a lot of hype when they started construction. It was going to be the tallest residential building in the city. It's in a very central location in the city, so everybody sees it. And it's just been a sort of construction site for years and years and years as it's run into all these problems. So eventually the original developer went into receivership and a new developer was appointed by the lenders who took it over. And this new developer, Tridel, they took the perhaps counterintuitive step of canceling out all the pre-construction sales that had already been made on the building. That involves giving money back, money that was already in the bank. That money has to be refunded. So it seems counterintuitive, but Tridel's plans is to give that money back, cancel those units, and reconfigure the entire inside of the building. Make the units bigger, make them more luxurious. The idea being to sell these units again, not to investors, but to end users who want to actually live in this building. And they'll only do that once the building is finished.
Good stuff as ever from you, Ari. Thank you very much indeed. Ari Alstetter of Bloomberg. Coming up, we have the latest headlines on markets, and we'll tell you about these problems, they keep getting worse, that Tesla is having with its doors. Data from StatsCan indicates that retail sales across Canada fell in October, led by a drop at food and beverage retailers. However, in a flash reading, StatsCan estimates that retail sales saw a rebound in November, with an increase of 1.2%. Shares in Lundin Mining are higher after the miner agreed to sell its subsidiary Lundin Mining US, which has a nickel and copper mine in Michigan, to Talon Metals. The deal valued at about $84 billion. It's in stock, and Lundin will have a total holding in Talon of almost 20%. Shares in Nike under pressure. The athletic apparel retailer warned that sales will fall this quarter. Now expects revenue growth to be weaker than expected due to persistent problems in China and at its Converse brand. Sales at Converse plunged 30% in the latest quarter. North American markets higher, you can see in early trading, and a couple of prominent stocks in Toronto, including Royal Bank and Barrick Mining, hitting record highs. A number of fatal car crashes involving Tesla vehicles has prompted increased scrutiny of the electric doors on the vehicles. That has triggered lawsuits over whether the design can leave passengers trapped inside. We're bringing you this Bloomberg doc.
Dixon went in the house, got the keys, backed out the Cybertruck, Mr. Dixon was intoxicated and on drugs.
These kids were hanging out before Thanksgiving. They'd all come home from college, and they were doing what kids do. The Cybertruck rounds a curve and crashes into a tree.
I turn the corner and I just see a car in a ball of flame.
A friend of theirs tries to push the buttons to open the passenger side door, both for the front passenger and the back passenger. Nothing happens. Doors are all activated by this low voltage battery that's right up at the front of the vehicle where this impact took place. This vehicle is designed where there is no exterior handle, and on the interior, there's no handle of a normal nature.
It's not only that, you know, these kids can't get out from the inside. This person who is there to save them can't get in from the outside.
So he picks up a branch, and after hitting it probably over a dozen times, it finally cracks and breaks.
Broke the front and back windows on the passenger side, and I pulled the front passenger out.
The friend goes in to try to get Krista, and she reaches her arm out, and he grabs her arm, but she pulls back because the fire is just so hot. And so he goes to the back door and tries to get to her from the back side.
It was too much fire and airbags, and I couldn't get to the rest of them.
A lawsuit has been filed over the deadly Cybertruck crash in Piedmont last November.
Seren Dixon, 19, Jack Nelson, 20, and Krista Sukahara, 19, all died.
While the police report doesn't include any conclusions about whether the doors played a part in the aftermath of the crash, the Sukahara family has sued Tesla. In the lawsuit, they allege Tesla's design choices created a highly foreseeable risk that rear seat occupants who survived a crash would nevertheless remain trapped when the vehicle caught fire.
We get the autopsies, and it's clear these kids were alive after this car crashed. They didn't have blunt force injuries. They died because they suffocated.
It's the worst nightmare ever. I have a hole in my heart that will never heal. She was the best daughter a mother could ever ask for.
Tesla for years has built its reputation on being a cool, safe, good-looking car maker.
Tesla is engineered to be the safest car in the world. And to be fair to them, they have done very well on US crash tests. They often get 5-star ratings. Flush door handles were very much part of the aesthetic. And the engineering, you know, it looks very cool.
For so many years, people who drive Teslas love their Teslas. They think their cars are safe, but this accident, these accidents revealed that there's actually something bigger going on.
I've been working on Teslas, oh man, I would say probably 12 years, maybe. A lot of companies have touch pads and things like that, but Tesla really had a stunning design when they decided, you know what, we're gonna have them come out when you wanna enter the vehicle and then go back in, so it gives it a nice, smooth look.
Rich Benoit co-owns EV Specialists, the Electrified Garage. He's owned multiple Teslas. He's a fan. But back in 2018, he flagged this to his large YouTube following.
You are not a true Tesla Model S owner until your car has been on a flatbed or one of your door handles has developed an issue where you could no longer enter the vehicle.
Since then, Tesla has produced millions of cars, and they can be found all over the world.
Once it goes to the masses and you start making cars on a scale of like 2, 3, 4, and 5 million, that's when, you know, Gen Pop, as they say, have access to the vehicles. And when they do, not all of them know the pitfalls, ups and downs of having door handles like that. When you push this button, it sends a signal to the 12-volt battery to say, okay, pop the door open. Now, if you have no 12-volt power, the first thing you're gonna do is push this button over and over again. You're gonna stop freaking out and realize this thing isn't working. In my opinion, this isn't terribly obvious that this opens the door. This is not a physical lever. This does not pull a cable. The actual way that you open a Tesla is you use this unmarked square right here. That's how you open it.
Is that the same on every model of Tesla?
It is not the same.
What if you're in the back seat?
Now, the back seat is the scary part.
So in the front seat, they're by the handle. In the back seats, they might be under the rug or behind a speaker grill or behind the trim on the door. Or I actually found one in a Model Y. It was in the door pocket under a plastic flap. A lot of Tesla owners themselves don't know that these manual releases exist.
You can design the best vehicle in the world, but you have to also think about what happens to a human being after a crash. You are panicking, and you're going to go to that muscle memory. And for most of us, muscle memory is like an old car where you just open the door.
I went down a rabbit hole just trying to find more information, like, has this happened before? And I found one in Wisconsin, which sounded very similar.
Jesus Christ.
They crash into a tree, the car catches fire.
So we think 3 or 4?
Now, what we find out when we read the police report is that there were 5 people in this car, and the people in the back seat, their bodies are found in the front seat.
And one of the images says on the body bag, female found climbing next to driver.
According to the police report, detectives noted due to the number of the bodies in the front seats, it appeared as though they were trying to get out.
There have been other accidents.
I don't know if they relate. It might be a Tesla. I haven't seen anyone. From what we heard, someone was trapped inside.
There was a Cybertruck accident in Texas. There was a crash in Miami. Elijah Arenas, star basketball player in Southern California, crashes in a Cybertruck, can't open the door, has to bash the window out with his feet.
Some of them happened on rural roads in, the South. In some cases, the driver has never been identified because they were burned beyond recognition. But larger than the fatalities are just regular consumers. All of a sudden, they can't get into their car and, they're calling 911. We've just come to realize that there's more than we knew. From 2018 on, we found over 140 complaints about Tesla's doors.
Kids have gotten stuck in their Teslas, pets get stuck in Teslas, elderly people get stuck in Teslas.
Owners who were in the grocery store buckling their kid into the car seat, and then they went around to open their door, and lo and behold, the battery had died. They had never gotten a notice about it, and then they're frantically trying to rescue their child. These complaints have been known for quite some time because, as we've also reported, NHTSA has a pretty publicly accessible database of complaints from owners.
Consumers have also complained that flush or fully concealed handles like that on the Cybertruck make it harder for people trying to rescue those stuck in a car. After Bloomberg published an investigation in September 2025 on Tesla's doors, the US regulator NHTSA, the National Highway Traffic Safety Administration, said it opened a defect investigation into Tesla Model Y door handles.
It's quite likely that the complaints that NHTSA gets are just a tiny drop in the bucket of what consumers are actually experiencing in terms of issues with their cars.
This is only in the United States, right?
This is only in the United States.
We have Toronto. There's, cases we've read about in Germany.
In Germany, part of the challenge is the data privacy issues are really prevalent. But I do think that we're making serious headway in getting a better sense from a regulatory perspective.
Regulators in the United States are increasingly finding themselves under pressure and at times face criticism for alleged inaction. That's where plaintiffs' lawyers and safety advocates say private litigation can be more effective in imposing accountability and offering victims a sense of redress. The Sukahara family's lawyers allege an expert inspection of the vehicle concluded there was nothing physically or mechanically keeping the door from opening.
had the door open, Krista would have been able to be extracted, whether on her own power or by Mr. Reardon, who's there, has already saved Mr. Miller.
Tesla has said its vehicles meet or exceed all applicable safety standards. In response to a lawsuit by the family of Jack Nelson, who died alongside Krista Sukahara in the Piedmont crash, the company said it shouldn't be held responsible for the accident or its result, citing among almost 24 defenses the conduct of others. A toxicology report showed that Soren Dixon, the driver of the Cybertruck, who also died in the crash, had a blood alcohol level that exceeded the legal limit.
When your chief of police and the priest shows up at your door at 7:30 in the morning, it's usually not a good thing. I screamed. I screamed a lot. I miss her terribly. Sorry. And I don't want anyone else to go through this. I want this to be fixed immediately. And I want people to know. Maybe people don't even know that these doors do this. I didn't know there's like some secret like latch or whatever to release the doors. Who would know that? Who would know that? Why would you need to do that in a vehicle? You should be able to open the door and get out if something happens. And that is why I want to do this today. I want people to know, to be safe, and what if they are driving this vehicle, what could happen.
So the door release is hidden behind a speaker panel. Yeah, okay, that was a good idea. Coming up, hot picks in aerospace and defense, including a French company that makes military aircraft engines and missile propulsion systems. Time for hot picks. Our guest has French aerospace and defense company Safran as his top selection. We're joined by Ken Herbert, analyst at RBC Capital Markets. Thanks very much indeed for joining us. I was just checking Safran's website. They sure are diversified. Drones, missile guidance systems, body armor, you name it.
Yeah, thanks, Andrew. I mean, it's important to keep in mind that for Safran, approximately 80% of its sales are commercial aerospace.
Okay.
It is a leader in aircraft engines, and obviously the services associated with that. So it is expecting to see a doubling of its equipment defense sales in Europe, which we think obviously gives investors good exposure to European defense spending. It has, of course, a broad portfolio, but very commercial aerospace focused as well, where we remain very bullish on the fundamental outlook, both for new build aircraft as well as for the aerospace aftermarket.
Right. And, that's interesting. So it participates, what kind of civil aviation engines does it make?
Yeah, so it is a 50-50 joint venture in CFM International, which provides predominantly narrow-body engines. So think about the engines on about 60% of the A320 Neo fleet and about 100%, obviously, of the Boeing 737 MAX fleet. That's what it's most well known for. It also produces parts for wide-body engines, as well as, to your point, a host of business jet and military engines or propulsion systems for helicopters, for aircraft, obviously, so across the board. But on the commercial side, smaller narrow-body aircraft engines are perhaps what it's best known for.
RTX, big in missiles, used to be Raytheon or part of Raytheon. What attracts you to this stock?
So RTX, we really like the mix, again, about 50% commercial, 50% defense. Within its defense business, its book-to-bill was over 2 times in the most recent quarter. It is the number 1 supplier of missiles here in the United States. So when you think about major new program starts like Golden Dome, you think about a lot of the restocking effort that's happening in the United States. It's a direct benefactor of that as well. And certainly when you think about international sales for key products like the Patriot missile, it's very exposed to that. So we think it ticks a lot of the boxes in terms of where we're seeing growth in defense markets. where it's very well positioned. And again, it also has significant commercial exposure. And we like that diversity right now because we do think we are seeing growth continuing on aerospace, certainly into 2026. And we like the portfolio mix within RTX very well.
And so again, they are a play on both civil. They have a civil franchise.
They do have a civil franchise. They obviously own Pratt & Whitney, which makes a number of civil aircraft engines. They also, of course, own Collins Aerospace. That and Raytheon are their three main segments. And Collins is a big diversified supplier of aerospace products, for everything from seats and galleys and interior equipment up through all kinds of systems and avionics and elsewhere. So again, diversified play, but we do think the defense piece within RTX is really where we see the most upside into 2026.
And then finally, a company called Loar, L-O-A-R. What do they do?
So Loar is a small component supplier, predominantly 70% commercial aerospace. They do everything from seat belts and other systems on commercial aircraft, predominantly a play on the aftermarket. So that is the majority of their aerospace sales. They do have about 25% of their revenues as well from business jets, but Loar significantly benefits from new product introductions, which has enabled the business to outgrow peers. But I think most importantly, it represents a way to play what we expect to be continued consolidation in the aerospace marketplace. The company has announced a significant acquisition that should close here in the near future, and we think future acquisitions will help the stock reverse what's been, as you can see from the chart, a bit of a sideways move over the last 6 months. But we think Loar as well on the small cap side is very well positioned.
I mean, could you generalize, over the years, have U.S. defense stocks been decent investments, or are they cyclical, or do they rise and fall with the political winds?
They've tended to be cyclical, right? In fact, in some ways, they're counter-cyclical with the broader economy. We like to say defense stocks are defensive. We do think, even though we're seeing substantial growth both in the United States and internationally in defense spending, they will remain cyclical. And there are a number of competitive pressures, and to your point, political factors that influence, obviously, sentiment on these stocks. So they are certainly cyclical. They'll continue to be cyclical. But we like the outlook from a fundamental standpoint now in terms of defense spending globally, and of course, certainly in the United States.
One name that always comes to mind when I think about defense is General Dynamics, GD, the maker of the Abrams tanks and lots of other defense systems. And that stock sure has had quite a good run over the past 10 years. I'm not sure if we can show a 5 or 10-year chart.
Yeah, I mean, business perhaps best known here in the United States as well for its Gulfstream business jet franchise. And I think the outlook for business jet travel has certainly seen some pickup here in 2025. I expect that to continue in 2026. Gulfstream, very well positioned at the upper end of the market, right? So specifically with corporate travel and high net worth individuals. So, yeah, and also, of course, to your point, very strong franchises in shipbuilding and in combat systems as well, which are both in relatively good positions as we think about broader defense spending.
Would you be a buyer of General Dynamics right now, or are you less keen on that stock, Ken?
We're less keen on General Dynamics right now. We've got a sector perform rating. We prefer RTX for sort of prime exposure here within the defense side.
Thank you very much. Really appreciate it.
Thanks, Andrew. Happy holidays.
Yeah, you too, Ken. Ken Herbert, analyst at RBC Capital Markets. Coming up, the ski industry facing shortened, more variable seasons amid global warming. But this year, the ski season is off to a decent start in some parts of the country. An Alberta clipper roared through Saskatchewan yesterday. It dumped more than 10 centimetres of snow onto Saskatoon. You wouldn't think Saskatoon is a great ski centre, but you can do it there. Now, this is great news for those in the ski business. They're now busy mixing the new snow into what they already made. CTV's Alison Bamford has more.
This is what Tom Wilms calls his hobby job, essentially playing in the snow. Pushing, packing, and piling.
And that's the final touch.
Saskatoon's Optimist Hill opened this week, a little behind last year.
This year's been a yo-yo. It's warm one day, cold the next day, and it's hard to really make good, efficient snow.
Virtually all the snow on the hill was man-made, the rest brought in from parking lots around the city.
The more snow we get falling out of the sky, the less we have to make and pay for.
Like the weather, across the country, ski season can be a mixed bag. In Banff, almost all of Sunshine Village's snow comes from the sky. A fresh dump this fall allowed for their earliest opening on record, November 2nd.
The sooner we can get skiers and snowboarders onto terrain, it packs it down, and it just is really good for the base.
Further east, a few December snowstorms have hills in Wentworth, Nova Scotia, reaping the rewards.
Right now it looks like mid-February here in Wentworth, so it's by far the best start that we've had in a long time.
Research shows the ski industry is facing shortened and more variable seasons due to climate change, but resorts believe these early starts typically translate to strong seasons.
Kids come out with their ski gear, their new ski gear at Christmas, and the vibe just keeps going into the season, right?
Back in Saskatoon, even a slow start to the snow hasn't hampered excitement.
Everybody's so happy to be outside.
Yesterday's blizzard closed Optimist Hill. Today, it's the cold temperatures that skiers will have to contend with.
CTV's Alison Bamford. Let's check out the TSX today. We'll have a look at some intraday trading, and you can see our market opened higher and has held on to its gains. We are looking at an increase of about 1% right now. What is the 31,777? So we are closing in on last week. Oh, no, excuse me. We are at a new record high. I'm sorry, I missed that. I missed the lead there. So the TSX is, in fact, now in new record territory, 31,777. Now I'm curious about the S&P. Let's see if it has got to a new record high. And the S&P still down from last Thursday. But as I say, the TSX hitting a new record high. Stocks helping, as I mentioned, big names such as Royal Bank. We're also seeing maybe we could have a look at a 10-year chart for Hudbay Minerals. That stock was up as well today. We were joined by Sam Crittenden of RBC yesterday, and he said prospects are good for more copper gains. Yeah, it looks. I'm just trying to check if Hudbay is at a record level. I'll confirm that for you. Yeah, certainly in the modern era, it is. I'm going back now to 2005, and there, yes, sure enough, still down from 2007 Hudbay, but it's hitting a multi-year high. There is a 10-year chart for Hudbay Minerals. Yes, still down. My chart shows, though, from 2007. But what a run. Sam Crittenden of RBC saying, though, we just had these endless mine problems this year. Teck in Chile, Teck soon to be swallowed by Anglo American, and other companies, including Freeport-McMoRan in Indonesia, where at least one life was lost in a giant mudslide. Let's have a quick look at the U.S. markets today, because the S&P is still down from its record high, but broadly speaking, U.S. markets up as well. The NASDAQ 100 index is a focused measure of tech stock sentiment. It's at about 25,246 right now. The record in late October, at the end of October, was just over 26,000. So it's not far off record highs. Maybe we could have a quick look. I think we have a comparative graph for the TSX and the S&P 500, always entertaining. So this is over the past year. The TSX has been beating its American big brother, which is interesting given the run-up in tech stocks. That's only showing the price change, and it's not actually showing the dividends, and that would put the TSX even further ahead. Thank you very much for watching The Open. Morning markets are up next.